Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as always. Guys, monster outflows on small caps. We're going to talk about what that means. Let's dive in.
Trade Genius.
Hey Bob, so there was a pretty big outflow on small cap ETFs. And, first of all, where is that going? And second of all, usually the small caps brings up the rear. So, are we getting a curveball here?
The only thing I could think of, Phil, is that we had the blow off top and because the small caps were really ripped and now they're exiting stage left. And I noticed now, with the VIX coming down pretty hard here, they've been trying to pump the FANG stocks again. But I personally, my personal view is I think it's lower high time, and I think the small caps are exiting, which is really weird because, with interest rates falling, usually small caps benefit from that. But I also read another article that said basically the interest rates can go to zero, but nobody's going to have access to credit. So I think it's going to be really, really interesting. And, and I'll give you a really interesting example personally is that we have really, really good credit. We just bought a brand new truck and I was tempted, should I lease it? Should I buy it? Should I pay it off? Whatever. And then I just asked the guy and, my credit is perfect. And to get the best rate, we put 50% down on it, which is insane. And which I think is telling me is that, they're really, people are really, really skittish about lending money right now. And I think part of what the issue is going to be. And so another thing, Phil, that I read, which is really interesting, is that the NFIB put out a report that showed year over year decline in average hourly rate. Now, what that means is that not that they're lowering people's salary that are employed. What they're saying is that the people with higher salaries are getting laid off and the people that are remaining have lower salaries or hourly rate. And, a lot of it is the high wage manufacturing and the high wage construction jobs are going away, Phil. And so that's further pressure, on the markets. And then, we still have this yen carry trade still bomb the drop here. And then we have the inevitable sell-off once the rate cuts start going into effect. And then we have the big unknown going into the election. So I just think people are pulling out of where they think it's very risky for them and that it's easy to get in and out of highly liquid names. So that's my view on it. I'd like to get your view on it. But before we leave, we can also talk about Wolf before we wrap up. But what do you think about the small caps?
Yeah, my view is that, and it's still my view is that we are, shaping up for a blow-off move. Where this needs to go is over 5,500 on the SPX. Now, maybe it's a situation where the small caps was a lot of short squeezing and people are taking profits in that and maybe rotating back into the Mag 7 again. That's one scenario. But if this, we're at a critical juncture here because we're hitting the 20-day moving average from below. This is the first time we back tested it since we lost it a few weeks ago. And so we're coming back up to it. If you look on the charts historically, and it also coincides with the weekly 9s, you got a confluence of two major moving averages right there. Those are big moving averages when it comes to being tested, especially from the underside. So if we do get a smack back down, maybe CPI is the catalyst, right? We're ramping up into CPI. Maybe it's a sell the news type of thing. But if we do get that smack down tomorrow morning, then what we really need to see is a higher low hold. Otherwise, then I start moving into the camp of we already saw the high, we're dealing with lower highs. And until you get back over the 20-day moving average or the weekly 9 EMA, then it's like you don't really have much hope for the upside. And this turns into a larger downswing that may not bounce until we get into our more seasonal bullishness in Q4, which means we could be down into the late October without much relief. So that's really what's at stake here. And I'm just keeping an open mind. Again, I kind of thought small caps might outperform if we go into a blow-off scenario. This kind of outflow makes you question that, and you have to respect the data that comes in. So I'm going to keep an open mind. Structurally, as it stands as of today, we could still be in a blow-off move. But if we get a big failure off of, say, CPI tomorrow, that might change things.
Hey everybody, it's Bob with Trade Genius. Usually I do fun ads. I talk about our service, but I want to be serious with you for a second. We've been helping a lot of people trading for a long time. As you can see here, I want to let them do the talking for me for a change. But most importantly, we want to help you too. If you have not joined our service yet, come check us out, tradelikeagenius.com. Full service. We have chat room. We have the algorithms for you. We give trades out every day. We educate you. So go to tradelikeagenius.com. Check us out. What you get out of our service is much, much more than what you put into it. And we'd like to see you in the room. Thanks for listening. Yeah, and it's interesting if you look at the volatility futures curve, is that your mid-October to late October rally is in the cards. So this could just be an extended consolidation, kind of maybe a triangle kind of a thing, and then they pop this thing in October to take advantage of another vol crush going into the election. The other thing about the 20-day that's really interesting that people really should pay attention to it is that when it does reject like this, if it comes back up through it again, usually that first push through is also, it gets sold back down to the 20-day. So a lot of big money doesn't come back in until that 20-day curves back up and has a successful retest. So we could just be in chop suey here, for maybe the next 45 to 60 days too. Now, all things go out the window if something crazy happens, in the Middle East, or the Japanese lose control of their currency and they have to raise interest rates, which are going to actually have a parliamentary meeting on, Phil, which is kind of scary. I guess there's no independent Fed at the Bank of Japan, so you have to keep an eye on both those things. But if I can actually ask you to opine a little bit on Wolf, a lot of questions in the room, people asking if we would address it on the podcast. We can go into more detail tomorrow, but it's been lagging. People were worried about, hey, is this move over? And then you made a few comments about, the relationship with the miners and the dollar and Bitcoin action. And I thought maybe if you want to give a quick blurb on that, maybe we could show some charts tomorrow on it.
Yeah, I mean, the dollar pressure is positive for the price of Bitcoin. Bitcoin premium is positive. Nobody was complaining when Wolf was outperforming to the upside. So there's probably just some yin and yang with the other miners right now. But in reality, the structure is intact. And I think that you can see this thing still make the big moves. Remember, Cantor, I think it was Cantor Fitzgerald or Vanguard, one of the two, put a $10 price target on it. We saw institutional volume come in between 4 and 450. Granted, we're under that band right now, but you start getting back inside of that. What'll end up looking like on the chart is that everybody kind of got trapped below. And so $4 reclaim is kind of important to see at this point. But once you get back above that and back above 450, I think you're going to challenge the highs, close the gap at 780, and maybe potentially get that $10 move. If things really start blowing off, right, you can certainly go higher because these miners are very volatile and then they're really high leveraged plays against Bitcoin. So you get above 10, things can move very, very quickly. You can just look on a historical chart of Wolf and see that for yourself. So I really don't think the story is unchanged. I think it's just that they're very volatile. But in terms of costs and their position in the market, I think they're good, and I think they're undervalued right now here, trading under $4.
Yeah, and that brings up a good point too, Phil. And before you joined the room this morning, is that I was telling people, when you bought Wolf, your intention was a longer term trade. You're looking for a target. You're looking for Bitcoin to do certain things. I trade differently than you. I'm like saying, hey, I'm in and out of these things in days and weeks, and I'll jump in, jump out, jump in, jump out. I have a few things that I own that are long term that I really don't care what happens to it short term. And my plea to people listening, customers and listeners alike, is that you have to know why you entered the trade. And it can't be because Bob and Phil entered it. You have to understand why you entered it, how much profit you want from it, how much loss you're willing to take, how much allocation you're going to put into it. Only you know that about yourself. And, and if you have to ask somebody, are you still in a trade that says they're going to be in it for a year, that shows your anxiety. And that means that you probably are over allocated to it, or you really just wanted to trade it. And I really encourage people to really, any trade you take, whether it's you're listening to us or anybody else or your own charting, is that you really have to understand why you're in it, how much exposure you want into it, how long you want to be in it, and what kind of risk you want to take in it. And I think it goes for anything. And I think it's important to understand that. And that way, trading, you shouldn't have any anxiety for trading whatsoever. It should be zero anxiety. Okay. If you have anxiety, it means you're allocating too much money to a trade. Okay. Or you're chasing and you get anxiety because somebody's in a trade. I got to get in this trade. And that's when it takes its first pullback. And then you lose money and then it goes up again. You're like chasing it again and it pulls back again and you lose money. That's how most people lose money in the market. So, you have to really understand, what kind of trader you are. And, are you inside out trader? You outside in trader? How do you are you a breakout trader, a momentum trader, or are you a dip buyer? So all those things that only you know. and we'll help in certain situations in terms of, hey, our algorithm is telling you to do certain things, and our algorithm is pretty much a dip buy mentality, right? But we occasionally are going to put trades out there like, hey, this is a structural change and this thing's going to move. And for Wolf, just so people know why, context for this, we had a double on Wolf before people got anxious. So
We had a triple
like,
on Wolf before people got anxious.
yeah. So it's even more so. So, I just bring this up. I don't want to belabor it, but I think it's important people understand. And I think Phil and I are going to talk more about these kind of things philosophically, as we do these podcasts, because, actually looking at charts and making trades is the easy part. It's really the mentality behind it that people really, really screw up. And, we'll try to help you with that as best we can. But with that, we'll let you guys go. Tomorrow, CPI report, who knows if bombings are going to happen in Israel. We literally have to take things day by day at this point because any of our theses can get blown up, with events that are beyond the scope of our understanding. So you guys have a great one. We'll catch you tomorrow. And thanks for listening. Phil, thanks for your comments. Have a great day, everybody.
Trade Genius.